The US economy kick-started Super Bowl weekend with some seemingly good news, with Friday's NFP figure being described by some as the best bad report the US had seen for some time, and encouraged many to believe the economy is beginning to heal. Joining me down the line to discuss everything from FX to football is Brian Jones, Senior Economist with Societe General in New York. Brian, the US Fed James Bullard was quoted as saying 2013 is going to be a better year, that he likes the idea of tapering the Fed's $85 billion of debt purchase per month if we continue to get the signs of improvement in labour markets. What do you make of this statement?
I'll take the view of the employment report first. Best bad report, I don't think I would have characterized it as that. I might have characterized it as the best of all possible worlds in the sense that employment growth was substantially faster in the final quarter of last year than originally thought. We created 200,000 jobs per month. And more importantly, because of the benchmark revisions and new seasonal adjustments, the level of employment in December was 650,000 higher than the Bureau of Labor Statistics had reported last month. I think it was a good report in the sense that everybody got what they wanted out of it. I think the equity market got stronger job growth, which implies stronger income growth and stronger spending growth. But by the same token, I think it's the uptick in the unemployment rate that really gave the bond market a bit of a lift. Basically because the Fed has, in their quantitative targeting scheme, they've told you the two things they're looking at are the civilian unemployment rate and the rate of inflation. And obviously, if the unemployment rate is higher than expected or moving up, there's going to be no quick move to change policy. As far as Bullitt's statement, I do agree with him that 2013 is going to be a better year. That's embedded in our own forecast. Our own view is that it would be premature to stop the debt purchase program before the end of this year. Our own forecast assumes that it runs through the end of the year and that ultimately we don't get a move in the federal funds rate until early 2016.
The problem of the debt ceiling is still looming over the economy. How do you see this playing out?
I think that's going to be with us for a while. There are several key dates that we need to be aware of. The next one is March the 1st, when the sequester would go back into effect. Now, our own forecast already assumes about $110 billion in spending cuts will materialize this year. If you consider fiscal multipliers of about a half, that implies that if the sequester goes into place, we lose about 0.2 on growth, and if they don't remove it, allow the spending to continue, we'll get an additional 0.2. Again, it's going to be like any political process. It's probably going to be very messy as they approach a resolution of it. Our next important deadline here in the States would be March 27th, which is when we have the expiration of the current continuing resolution. And in absence of that, or another continuing resolution, funding for the government will cease and possibly could force a shutdown of the government.
In an interview before the Super Bowl, President Obama said there is no reason why we can't have really strong growth in 2013. What is your expectation in terms of GDP for the US this year, and what will be the main factors driving it forwards?
Well, again, we do see growth on a year average to year average basis. It'll probably be very close to the 2.25% we got in 2012. However, on a calendar year basis, fourth quarter to fourth quarter will probably be closer to 3%. Well, the usual drivers are that you've got to look for, once we get beyond the first quarter, that you'll get a gradual pickup in consumer spending over the course of the year, and then investment will pick up, not just housing, but also business fixed investments. Again, I think, with the mistakes that all forecasters make is that they'll catch the trend, but they can be off on the actual magnitude of growth.
If we touch a little bit on the Super Bowl for a moment, the whole world was watching this weekend with many buzzing about the economic stimulus the big game could bring. Officials estimate the Super Bowl will inject $434 million into the local economy and trigger another tourism boom. But how far-reaching is this boost in the tumultuous economic climate?
I think whenever you have a major sporting event, it tends to help the area in which it's held. So I think the net benefits are going to accrue primarily to Louisiana and the city of New Orleans. New Orleans has been recovering since Katrina several years ago, and again, I think it gives an added boost to the economy. But how far it goes beyond the boundaries of the state of Louisiana, I think it's pretty local, the effect.
The city is hosting the Super Bowl for the 10th time, but the first since the Louisiana Gulf Coast region was devastated in 2005 by Hurricane Katrina, which caused more than 1,800 deaths and billions of dollars in property damage. How important is it for the local economy to get New Orleans back on the map for a positive reason?
Well, I think, again, as I said, I think New Orleans had been gradually recovering. And I think whenever a city or locale is given a major sporting event like this, it's a positive vote for that city, that they're able to handle a major sporting event like that, and it's a sign that the area is recovered.
And finally, from an FX point of view, what is your forecast for the US dollar as we progress throughout 2013 in light of some of the challenges we've already mentioned?
Well, given the growth forecast that we have in hand, and also the fact that we do think that interest rates are going to gradually back up over the course of this year, we've got the dollar against the euro probably moving closer to something like 1.19 by the end of the year, and a strengthening in the dollar against the yen maybe to something perhaps at 97.
Brian, thank you very much for your time today. It's been a pleasure speaking to you. Well, that's all from Brian and myself, but the Dukascopy TV team has brought you a full bulletin today, including a press review and a week ahead interview. So please do keep clicking back. Bye for now.